The problem is the standard for discussion is set by the whites, and a lot of Negroes now don't want to accept that standard anymore. They say we're going to have our own standard. I think that the hookup comes if you can develop a whole new standard where whites and Negroes can have a dialogue. Not either one of those are acceptable anymore. I mean, whites aren't going to accept Negro standards, and Negroes no longer want to be white. So that the clear thing is to develop a whole new standard, and then everybody move toward that, so there can be some kind of dialogue.
On my way to Washington, feeling mighty sad, thinking about an income that I never had. Everybody's got a right to live. Everybody's got a right to live. And before this campaign fails, we all go down in jail. Everybody's got a right to live. Black man picked the cotton long time ago. He's been the victim since brought him to the show. Black man dug the ditches, hewed down the pines, gave his trouble to Jesus, kept on towing the line. Everybody's got a right to live. Everybody's got a right to live. And before this movement fails, we all go down in jail. Everybody's got a right to live. Black man dug the pipelines both night and day. Black man did the work while the white man got to pay. Now look at here, son. This is a brand new day. No more full-time work. No more part-time pay. Everybody's got a right to live. Everybody's got a right to live. And before this movement fails, we all go down in jail. Everybody's got a right to live. Yeah. I want my share of silver. I want my share of gold. Want my share of justice. Kill my dying soul. Black men dug the ditches long time ago. He's been the victim since brought him to this show. Everybody's got a right to live. Everybody's got a right to live. And before this movement fails, we all go down in jail. Everybody's got a right to live.
All right. So how's everybody doing? You can unmute yourselves, turn on your camera. How's everybody doing today? Happy Sunday. So today we're gonna have a chartered accountant with us. But before we start, we have a moderator now. So moving forward, Pauline is gonna be helping us to keep track in terms of time and everything like that. So we're always on time and people don't like take hours, and I don't take hours talking and stuff, right? So she's gonna help to moderate the meetings. So I don't know, Pauline, if you wanna just share something on that, or just something briefly, if you don't mind.
Yeah, so probably our next meeting, we won't do it now, but moving forward, we'll have like a certain allotted time for everyone when they're speaking. So then we also give space to others, and then so then we could just end on time. During in the beginning of every meeting, we'll just call like a meeting to order, just saying what time we start, and I'll be asking folks who have their name as iPhone or whatnot to actually put in a nickname or their name or however they want to be identified. And then for those who want to present and are like the co-hosts will have to be on camera. It's not mandatory for you to be on camera, but it is encouraged, just so that people can put a face to the voice. And yeah, that's pretty much it for now.
Okay, nice. Thank you so much.
Okay, yeah, so we're hoping to send out the survey to kind of canvass the group for membership, kind of what everyone can afford to pay for membership every month. Those things, the communication team and the membership team are working on that right now. So hopefully that will be sent out next week or this week.
Just a quick introduction. Mr. Ken has years of experience in in accounting, and also a real estate investor himself, a chartered accountant with years of experience. So It's a pleasure to have you with us today. So you, as we discussed, you know what we're trying to accomplish and what we are going to accomplish, God willing. The goal of the group is to acquire asset. In this case, going to be land. So what we're trying to do as a group collectively is to pull our resources together and leverage the power of group economics, and acquire land. So far, we don't really know where the land is. We're putting in a lot of work in terms of doing research. We have a team of experts that are gonna be looking into the land for us and where will be the best place to purchase the property. So that's what we're trying to do. And the goal that I have is to do this in such a way that everyone that is part of the initial purchase of the asset will retain ownership and also get the return on investment on anything we do on the land. So the goal is to develop 75% of the land, and open that to the public, like build like residential units and commercial units on it, and retain 25% of the land. So if we get like 300 acres, I believe 225 will be open to development, while 75 acres, we will retain that as the original owners of the land, and we can build our own custom homes on that 75. So that is what I'm thinking. And I just need you from your expertise or experiences, if you can share some lights on what I've just explained, and help guide us. So if you don't mind.
Okay.
Yeah.
All right. Can you all hear me?
Yes.
Mhm.
Okay. Excellent. Excellent. All right. Thank you for giving me the opportunity to come chat with all of you today. All right. So yeah. Oh, thanks, Akin, for sharing that. So I think this is a really, really good idea. I love it when I see young people like you thinking about long-term investments in real estate. I think that is really good because a lot of people don't think this way. So that's awesome. So quick question before I just want to get a sense of what to even share. Um, so for majority of you, are you all mostly employed, or do you own a business? Maybe you can even drop that in chat or something. If you say, you can put E if you're currently employed, B if you own a business or a side hustle or something you're doing. I just want to get a sense of the group to see what's happening. So I only see, okay, I see so it looks like most people are employed. I see a few that are self-employed. Oh, okay, all right, so that's good. Is there someone here that is currently investing in real estate? You can say yes if you're investing in real estate or maybe in anything else. So there are a couple of people that are investing in real estate, so quite a bit. Okay. All right, so that is good to know. Okay, all right, so that is good to know. All right, so what I will share quickly, that I'm just going to tell you briefly about myself. So Ken Green, I own a chartered accounting business that I run with my partner in Mississauga. I live in Oakville here with my wife and kids. Real estate is something that we do on the side. So that is our sort of our long-term retirement planning. So we've been doing real estate since 2006. So it's been a while since we've been investing in real estate, and we've done different things in real estate. But for the most part, we just do buy and hold. So right now we have about 10 different properties that we own and manage. And we have other partnerships with other people as well in the business. So when Akin told me about this opportunity or what he is trying to do, I think it is really good. It makes sense. But what I just wanted to speak with you briefly here, just to particularly for those that are employed, because now you guys are moving to the investment phase. And is always a difficult transition if you're employed and you have a full-time job. Is a challenging transition to move from there all the way to investing, because investing is always a long-term play. And it requires a totally different mindset if you want to start investing. How many of you have read the Rich Dad Poor Dad book? Okay, so some of you have read the Rich Dad Poor Dad book. So for those of you that have read the book, I mean, you will remember the sort of transition that Rich Dad illustrates in that book, right? So it illustrates from being employed to being self-employed and then going to business and all the way to investments. And one of the most difficult transition is always moving from that employee side to starting your own business, because it requires you to be different from who you are today, right? So there's a huge mindset shift that you need to make. You're moving from something that is stable to something that you're not really sure of. But one thing with making that move is that on the other hand, you're already moving from opportunity or the self-employed or the job that you own that is sort of limited, um, to a business that has almost unending potential when it comes to how much you can make and how much you can grow your wealth. And so it's always important for you guys to understand that shift. Now, when it comes to investments, I just typically look at a few things when it comes to investments. And I think that's going to be useful to all of you now, because now you are about to make this investment in land development. Let me see. I don't even know. Can I share my screen here?
Yeah, I can make you a host and then you can share. Let me just make you a host quickly.
Okay. And I can just illustrate something quickly.
I've done that, so you can share now.
Oh, okay. All right. So let me see if I can pull up a Word document here. Okay, so hopefully, can you all see my screen, the blank screen that I have here? Okay,
Yes.
excellent. So when it comes to investments, I typically look at just four criteria, right? So the first one that I look at is liquidity. So when I'm making investments, I look at the opportunity and say, okay, can this opportunity give me liquidity? Right. So that's one criteria, and I'm going to explain that a little bit. So the second is growth. Right. So I look for opportunities that will give me growth. Number three, I look for opportunities that are tax efficient. Then lastly, there's one more. So there's liquidity, there's growth, there's tax efficiency, and there's leverage. So if you live in Canada, you know taxes is one of our biggest expenses. If you make any sort of income, particularly, it's even worse if you're in the high income end, taxes is your biggest investment, because we pay income taxes, we pay payroll taxes, we pay sales tax, we pay gas tax, we pay all sorts of taxes. A lot of us, we don't even consider the significance of the taxes we pay just because it's automatic, right? We just spend, and sometimes we don't even look at the receipts, we don't even look at the documentation, and we just go about spending. So taxes is a huge deal. And so one of the things I look at very closely when I invest is to say, okay, does this investment vehicle give me tax efficiency? And if it does, then yes, I check that and I go ahead to invest. I look at growth. Growth also look at capital appreciation. It looks at the return on investments. So typically, I will not invest in anything that gives me I look at things that give me at least 10% growth. And if it's less than 10% growth, there must be other things associated with that, right? So I look at things that give me growth in terms of annual returns as well as in terms of ability to appreciate over time. I look at liquidity, and one of the reasons why I look at liquidity is mostly is one for opportunity cost. So if, for example, I come across another opportunity that offers me great return, I need to be able to liquidate and pull capital to move to a different investment vehicle. Then the fourth one is leverage. So leverage is so important because in this economy, it's so hard to build wealth without leverage. It's not as if it's impossible. You can do it, but leverage will shrink time for you, right? So that's why leverage is so key. And so with this in mind, I just look at all the asset categories anytime I want to invest. And when you look at asset categories, right, there are not a whole lot of categories when it comes to um, assets that you can invest in, right? First one is business, right? So business is a great asset to invest in. Real estate certainly is a great asset to invest in. Uh, the most common one people do these days is the paper assets, right? So paper assets, you're talking about stocks and all of those things. Then there is also the commodities, right? So when it comes to asset categories, these are the top four categories in terms of assets. And and again, when I start looking at these assets, I just go through my checklist. For example, if I want to invest in business, I say, does business give me liquidity? Does business give me growth? Is business tax efficient? Can I leverage business to grow with? Because at the end of the day, one of the reasons why we invest is to grow our wealth, is to make more money over time, right? And so I sorry, I didn't know you have to admit people. So some people are coming in, I'm just admitting them. Okay. Uh, and so I look at these opportunities for me to invest. So you guys are playing in this, right, in the real estate. And real estate is great. It's one of the best assets that I love, that I leverage, that I use. Does real estate give you liquidity? If you do it in the traditional sense, real estate may not give you liquidity, right? Because real estate, you invest and you may not be able to pull out your cash quickly because it may take time to sell. And if you don't sell it correctly, you may even lose money. So the way I set up my real estate to give me liquidity is I invest, I set up a line of credit on that asset. And as you know, with real estate, as time goes on, it appreciates in capital. As my tenants pay rent, it reduces my debts. And so I build equity over time. And because I've set up a line of credit against that real estate, I'm able to pull that capital anytime that I want, right? And so that's how I've been able to position my real estate to get liquidity from my real estate. Real estate can give you liquidity because you can always borrow against it, right? And that's why real estate checks that box for me. If it comes to leverage, real estate gives you leverage, right? So real estate is one of those assets where you put down 10%, you put down 20%, and you can leverage other resources for the remaining 80% and get into the deal, right? So real estate checks that box when it comes to leverage. When it comes to growth, we all know that real estate grows over time. That's why I love real estate as a long-term play, because if you hold it over time, it appreciates because nobody's creating more land, right? So land is a scarce commodity. And so if you invest in the right area, that asset will certainly grow in value. So real estate will check that box. Is real estate tax efficient? Of course it is, right? Particularly if you run real estate as a business, right? So if you run real estate as a business, you can deduct everything that you do to keep that asset, right? I can deduct my utilities. I can deduct my property management. I can take depreciation. I can deduct my interest cost. So there are so many things you can do with real estate, and it becomes very, very tax efficient. Business is the same thing. Business is something, again, that checks all of these boxes, right? Business, if you run a good business, you have liquidity, you have growth, you have tax efficiency, and you have leverage. Um, so these are some of the things that you have to look at. So as you guys look at this opportunity that you have, then this may be a good criteria for you to start looking at that opportunity. So now, based on the description that Akin provided, if you're playing in land that you want to develop real estate, um, then certainly there is risk, right? So you've introduced risk in the equation. So risk is something that you always have to look at whenever you're investing, right? Anytime you go into business, anytime you go into real estate, anytime you invest in any of these assets, what you're doing is that you're introducing risk, right? You're introducing risk. Now, for you to be able to manage risk, I mean, what do you do, right? To manage risk, uh, there are certain things you can do yourself to manage risk. The biggest one for me is always education, right? So the biggest one for me is always education if you want to manage risk. For those of you that are Christian, you're very familiar with the Bible verse that says, "My people perish for lack of knowledge," right? And that is the reason why a lot of people lose uh, money. It's just because they have no knowledge. They don't know what they're getting into. And so if you lack education and you invest in this opportunity that you guys are putting together and introducing, um, what will happen is tomorrow or 6 months from now, you'll come back and say, okay, I want my $5,000 back. Right, so that's what most people, that will certainly happen, right? If you have that, you will come back 2 months or 3 months later. Oh, I cannot get my money back. I don't want to invest again. You want to pull your money back. If you're not educated, if something goes sideways, uh, you start screaming hell, right? You start looking for who to blame. You start you start spreading all sorts of allegations that may not be true, right? If you don't know, um, then you'll be in a situation uh, where you start blaming yourself, you start blaming others, and so that's why education is so key, and that's why it's so important to understand what you're getting into. Right, I'd never advise people to invest in something that they don't know, right? So always important to get education, understand the risk involved, understand that you're getting into an investment that is a long-term investment. Because I mean, at this point, with little or no information, it's possible that you can lose 100% of your money. It's possible that you can also double your money multiple times. Uh, is possible that so many things can happen. So that's why it's always important to understand what you're getting into, understand what the long-term play is, understand what the potential is, understand what the risk are, right? You should be able to itemize what those risks are, then come up with a plan in terms of how you can mitigate those risks, right? So that's why I love this one. So a big one is always education, right? Uh, then secondly, how can you mitigate risk? So for us, I mean, I can give you an example. So we invest in real estate. One of the biggest mistakes we made was even our first investment, right? So our first investment in real estate was the biggest mistake that we made, because when we made that investment, we didn't get the whole picture of what was entailed, what it took to really get into real estate, right? And so we signed documents without even knowing that we had a second mortgage on that deal. We didn't do a due diligence to find out who was going to be managing that property. Um, So we didn't even do a background check. So we ended up in a deal where it was poorly managed. All of a sudden, the vacancy rate just shot up. Um, then we got into a situation where banks started repossessing some of the assets. And so we were just lucky, because we were able to put together some extra cash just to pay off the second mortgage and to just hold on to dear life with the property. Um, then that way I was able to get onto the board. We got another investor to come in to take up most of those vacant properties and to inject capital into the deal. And that is how we were able to just navigate that bad deal. And we held on to that real estate for about 7 years before we were able to sell it. So when you're getting into real estate, understand that, you the potential is always there to make money, but again, there are risks that you need to manage, and so it's always good to understand those risks. So when it comes to building wealth, one thing you need to know about money is that money is a doubles game, right? And what do I mean by that? What I mean is that if you're investing 5,000 today, uh, there is the potential that 5,000 will double, right? And now the key is how long will it take for that $5,000 to double, right? Is it going to take 2 years? Is it going to take 3 years? Because if you start to look at it, how long will it take you to be a millionaire if your 5,000 doubles every year, right? So if you invest 5,000 today, if it doubles, it goes to $10,000. If it doubles again, it goes to 20. If it doubles again, that's 40K, right? If it doubles again, you have 80K. If it doubles again, you have 160K. If it doubles again, you have how much is that? 320K. If that doubles again, it's 640K. And if it doubles again, you now have how much is that? 1.28, right? And now you're a millionaire. So how long will that take? 1, 2, 3, 4, 5, 6, 7, 8. So 8 doubles to a millionaire with $5,000. So now the challenge now is to find out, okay, where are the opportunities that I can put my money in um, that will allow me to double that money 8 times to get to $1 million? Because this is all the game. This is the game rich people play with money, right? And they just look for those opportunities. Some of those opportunities will double their money every 2 years. Some of those opportunities will double their money every 5 years. Some of those opportunities will double their money every year. And so the deal for you as someone that has gone into that space of investing is to start looking for these opportunities that will allow you double your money multiple times, right? And this is the game the rich people play. This is the game the smart money plays. And this is the game most of you should be playing as well. But hopefully this is helpful, using this criteria to assess your investment, making sure you understand the risk that is involved and looking for ways to mitigate those risks, right? Educating yourself. If you're making sure you are aligning with people that really know what they're doing, people that have experience or gone through these things, getting coaching and mentorship from people that have gone through the path that you want to follow. So by doing all of these things, that is the way you mitigate your risk, and that is the way you shrink time and invest. So hopefully that is useful. I'm gonna stop there, and let me know if you have any quick questions that I can answer.
Wow, thank you so much.
That was amazing.
Amazing, yeah, thank you.
Yeah, you're welcome.
That is the information that.
So as usual, guys, if you have any questions, just raise your hand.
As you said, I love the fact that you said education, because we're huge on that. And that's something that while we're moving towards acquiring the land and building the community, we don't want anyone to show up at this whatever stage without knowing what we're doing, why we're doing it, how it's going to get done. So that education is huge.
That's why it's important. Like, we're trying to bring everybody along as much as possible. One of our sessions, we had a lawyer come in as well to advise the group. And we're honored to have you now today. So we're just gonna keep doing that and consult the experts and So that way we can all move together. So if you guys have any questions, I'm surprised no one is asking any question. If you have any questions, just raise your hand. You can, can do that through Zoom. Just raise your hand digitally, and then I can call on you to ask your questions. I think I'm just gonna pick on people now. Brian, I know you have questions, man.
Nah, not at all. Been there,
No,
done
no, I'm
That's
shocked.
very straightforward.
All right. Olufemi, you can unmute yourself and ask your question.
Okay, thanks, Akin. Hi, Nicole.
Hi.
Hi, Ken, and
Yeah,
everyone on the
hello.
call as well. Okay, so this is not really a question, but there's something I know Ken will not do that I want to do for him. So he's got a book called Tax Efficient Wealth. A lot of you may not know about that. It's a fantastic book. I've got the book, I read it. It's filled with a whole lot more information than what he has shared today. And I just want to just mention it that if you are so inclined, please try and get the book. That's it. Good stuff, good presentation, Ken, as always. Cheers.
Thank you.
Thank you.
All right, thank you.
How
So
can
what
you
I'll do, I'll just drop a link in the chat here. Then you guys can go grab a copy of that free. Let me see if I can find it here. So, and if you have any questions later on, just feel free to shoot me an email or something, and I'll be happy to answer.
So with our project, like we discussed, right? It will be tough for us right now to really, to quantify like a definite ROI, right? It'll be tough because number one, we don't know we don't have the land, we don't know how many units we're gonna build on the land, so it'll be difficult to kind of know the ROI right now.
That's true. Yeah, it's gonna be challenging to know.
Yeah, but the way I want to basically draft this is to have everyone that put the money together to purchase the land, they will always get any profit the organization makes, because we have to buy this as a corporate entity instead of buying it individually. What do you have anything to add to that?
So I mean, if you want to buy it on your own, you guys know that getting into real estate is so expensive, particularly in the GTA area.
Yeah.
And so that's why it's kind of challenging to do it on your own. Not that you can't do it, but at some point you still have to leverage. You still have to leverage other people's resources. But it's a lot easier if you can get a group of people together. Then that way, a group of people is easier to pull resources together, and with those resources you can get into the game, right? Because the whole idea is to get into the game, right? Instead of waiting on the sideline and hoping that prices will drop. So it's always good to pull resources if you can. Then that way you can get into the game. But I mean, if you have a good job, you have good income, then maybe you may be able to save enough to get into the game. But you all understand, we live in a country where it's so challenging to save. There's just so much that is pulling on our resources, and so it makes it very challenging to even save. But that's why I love this idea of pooling resources. It's so hard to do because sometimes things like this is very difficult to manage. And so that's why I love what you guys are doing, trying to educate people, right? You want people to get in knowing exactly what they're getting into.
Exactly.
Because it makes it a lot easier to manage that process when everybody's on board. And because you don't want to be taking money from people that don't get it, right? You want to save yourself that headache.
Exactly. You give us a lot of problems later, right?
Yeah. So important.
Okay, amazing. So yeah, I mean, honestly, I think that's what it's about. Like individually, we can. I mean, some of us can probably do it and afford it, but collectively we can do so much more, right?
That's right.
We can, because what we're proposing is to actually build a community. It's not just just one residential unit or two. We're talking like it can be 50 to 500 homes, right? So it's
That's right.
it's something
That's right.
big. It's not just a project for one person. And I love what you said about, the line of credit. If the board is okay with it, because we're trying to put establish the board of directors, put everyone in place, so the company is organized. If we have the board in place and they agree, and each member of the organization agrees with this idea, I think it's a fantastic idea for us to purchase the asset with cash, and then maybe get a line of credit on that asset, because I mean it's ours. We own it cash, and get a line of credit on that, and
Yep.
use the line of credit to do other businesses, like open hotels, or like build other properties that we could sell and do other projects, right? So I really love that idea. It's something I had in mind, but it's amazing that you brought that up. So yeah.
And it's good, and there are people in our community that have done exactly the same thing. So there are experiences you can leverage. People in our community that have developed, they've built, they're in the business, and so there's enough experience to leverage within our community if you're getting into this kind of business, this kind of space. So there's really no shortage of talent. And so that's one way you mitigate risk as well. Just look for people that have gone through, done exactly what you're hoping to accomplish, and learn from them, tap into their wisdom,
Nice.
and that way you can get into the business quickly.
Thank you. Nicola, you have a question? If you can unmute yourself, please.
Can you hear me now?
Yes.
Yeah.
Okay. Basically, I wanted to ask the gentleman with regards to this project that we're trying to do. I've found that they're in existence all around Ontario. Like I drove into one by accident, and it happens to be local in Halton. It's a community that they own a certain amount of acreage. It has, but she spoke to me about having to put down rules upon how the occupancy would be, that it can't be leased storage. It has to be owner occupied. I'll be interested to find out as to, once it's all subdivided, just like we used to do back home, we used to buy a piece of land, subdivide it, everybody has a piece of it, and like you're saying again, benefit from the additional resources on the land. If I own a section of it, would you be able to help us understand what that would be? Would it be a case of shares? Would it be a case of dividends? What would that on the other assets? Have we got down into that kind of information yet again? And what advice could you give us on that?
Divide. We can't purchase land and divide.
I think this is, I'm not sure if this is a question for Mr. Ken.
Yeah.
But what we're proposing really is, once we acquire the land, we will have up to 75% of that land available for to the community, for roads and schools and library and just general development, right?
Okay.
And the 25% will be among the founders of the organization, those that purchase, those that bought into the company. And when we get to that phase, for sure, we would divide the land in terms of in terms of the units that you have, right? So we're proposing that each unit will be around 5,000 to get in. So if you purchase like 10 units, for instance, based on the total allocated portion that we have, we would basically divide that based on the number of units you have. So if you have 10 units, for instance, let's assume we have we have 100 acres. Out of that 100 acres, you will probably get 10 acres because you own 10 units, right? For your own development. But that is the 25. That's if a unit is an acre, right? But and also the 75% that is open for the general development and so on. Whatever profit we make from that 75%, after paying like the company expenses, paying the builders, paying all that stuff, whatever is left, will be divided among the original investors, right? So those are like some of the ideas we have now, but we're still trying to work out all the details.
I think the other thing too was that when we first came into this, and this is where the education piece even comes in as well, we were like, we wanted to everybody put money together and then buy the land, like directly buy the land as individuals. But then from the advice from the lawyer, he said that it's
No.
not a good idea to you buy an acre, I buy an acre, that type of situation. So instead, that's why we had to form a corporation, and then that corporation will be what we will fund to be the vehicle or the money that's actually going to purchase that land.
Correct.
So what we now have to use is bylaws
Okay.
and written agreements to divide the land and to see how we can do that where everybody gets their rightful share.
Correct. Good. Good. Good.
Yeah.
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 Yeah. Good. And obviously that's where
Yeah.
Ken comes into sorting out the tax element of it, because
Exactly.
now
Exactly.
the dividends is going to come of that, and there's going to be a lot of overheads. There are a lot of overheads. It might be even be interesting, to
Sorry,
to
just give
find,
me 1 minute. I'll be back. Yeah, continue.
Okay, sure.
yeah, just it's the mapping out of it. That's the main thing, isn't it? Right?
Yeah.
Yes.
So we will have we're talking to our lawyer now to basically come up with a draft of the bylaws. So the draft, once we get the draft, each and every one will get an opportunity to review it and add to the bylaws, and then we can have the lawyer back in another meeting with the group to basically go over the bylaws, right? So we can add elements to it. Like one of the things that I mentioned to him is we want to capture in the bylaw is that if people can basically pass this asset to their children if anything happened to them, for instance, right? It's something that you can pass over to your children, right? Things like that. We'll find ways to capture it in the bylaw.
Yeah, totally. I think that's great. Thanks for answering my question. I think it will be even to find out how it's been done before, just to look at how that compares to what we would like to potentially change. I'll message you on the direct message you and give you the information.
Amazing,
Nice,
amazing. Thank you so much.
No worries. Thank you.
All right, that was great. Any other questions? Any other questions, comments? Anything else?
I think there's somebody who has their hand up.
We can't let Mr. Ken just go like this. Oh, okay. I think 9 Eternal 9. If you can lower your hand and mute yourself.
We can.
Yeah, can you hear me?
Yes, we can hear you.
Yeah, I can hear
you. Good night to everyone. My question is it possible for you to clarify what a unit is? Our definition of what a unit is. That wasn't clarified.
Oh yeah.
What's the definition for a unit? If you could, please.
So right now we're just saying we're using the term unit because we don't know the size of land we're gonna be getting. We don't even know where the land is gonna be and so on, right? So we're just saying unit. What a unit means is whatever land we purchase. If we purchase 300 acres worth of land size property, if it's 300 people that purchase that, based on the total number of people that purchase that land, then we'll divide that equally. So each unit will represent, each investment, right? Or a portion of that.
It would be
property, right?
Yeah, I think it would be similar to a share, right?
Yeah, it's like,
so if you get 10, I get 5, then we divide that accordingly, and then that would be your units that you're buying or your share that you're buying.
Because right now, phase 1 is just purchasing the land, right? Phase 2 can be something else, maybe developing the land, right? But since we're purchasing the land now, and we don't really know the size per se, we don't know.
We'd have to determine. It would be something that we would determine, but
we will know eventually, But now we don't really know.
Yeah, just equate it to as if you were buying a share or a stock of a company.
A stock of a company,
so
exactly.
So you have a portion, that's your portion that you're purchasing. So that 5,199, which was proposed by the finance team, would be that the price of 1 unit.
Will be a price of 1 unit. So once we get to our target, and we for instance, if the goal is to raise 1.5 million, collectively as a group. And we get to that amount, then we'll start looking for the land, and we'll start, and if you're part of the investors, you have an opportunity to go and visit the land. And once we agree on the land and we purchase the land, we will know the actual size, right? Then we can use that size to, divide based on the total number of people that invested. Then you actually know, what your unit represents, right?
So it's
Okay, so
yeah, go ahead.
so for now, the definition or what you substitute word instead of using shares, you're substituting the word units for now, basically.
Yes,
because it
Okay.
makes more sense based on what we legally can do with the group.
So
right, because the thing is, the shares were only 50 shares available, for example, right, for every corporation, correct?
Yeah, we're limited to only
and
50
so
shares.
we were like, well, that's not going to work for our group because we have way more people who want to come in and be a part of purchasing the land. So the terminology now that we have to use has to fit the group. So that's why we're calling it units versus shares, because legally we're limited on the shares that we could give out to people.
So based on what the
good.
lawyer said, a private held company or organization in Canada only has 50 shareholders or something like that. You only have 50 shareholders. So one of the things we're trying to get away from is we don't want to limit ourselves based on the terminologies and the restrictions placed there by the colonial masters, right? Is as long as it's legal, we're not doing anything illegal here. We're just a group of people coming together to buy land. Our bylaw and agreements and so on can kind of, state all the rules, the regulations, and so on that we all will agree to and sign to. So
and in addition
it will
to
be
that,
a legal binding document.
Yeah, and in addition to that, your return on your investment would also be
as a result of the unit you own.
What's the word I'm looking for? It would be listed or documented in that, depending on how much.
Yeah. So the bylaw will govern our organization.
Yeah.
More of like our Bible per se, and then we'll have our board of directors, the council of elders. I think we covered those in some of our previous meetings. Hope we answered your question.
Yeah, you did. Thank you very much.
Okay, awesome. So Godfrey, you can lower your hand.
I'm sorry if I'm asking something that you might have resolved in the past.
That's okay.
I've had experience with crowdfunding back outside Canada. Some of them were not very as planned. Often they don't, unless there's a lot of front end job, and which is good, which is what you are doing now. And I'm seeing some level of transparency you have now, especially the education. They're trying to educate the team, which makes a lot of sense. My question is some things that needs to be clarified upfront. Remove as many vagueness as possible. I understand the shares versus unit stuff, but it will be clearer if a unit is, say, $2,500 or $5,000. Let that be. I'm just suggesting. Let people know from the beginning that, look, to get a unit, I need 5,000. Then later on, we might decide what portion of land will give you. How many units will give you a portion of land? But when they buy in, they know, okay, I've bought in 10 units, I bought in 40 units. A measure to start with. We can suspend when we get land to know how many units will eventually be a portion of land. My other question is this: what if someone doesn't have enough units to make a portion of land? Is there a way he doesn't have enough to own a land, but he still wants to leverage, he still wants to connect with this initiative? Yes, it was only able to buy a unit. Maybe a unit is 2,005 or 5. Was only to buy a unit. But is there a way it could be carried along with respect to the dividends the corporation will eventually be making out of it?
Yeah, so sir. Thank you so much for these
Good
questions.
question.
Brilliant
And input.
questions. So the first one we've already addressed. I think in our previous meetings, we actually sent out a document called the blueprint, the black print document. The amount per unit is $5,000. From based on the numbers the finance team, we surveyed the group, so majority of people said they're willing to put in 5,000. So that is the price per unit. There's an additional cost on that, which is $199. That's as a result of the lawyer, because the money is going to be going to the lawyer directly, right? Initially, the lawyer said he wanted 6% on every unit. So, I was like, this is too much, because I did the maths and I was like, this is $300. Why do you need $300 for everybody sending you $5,000? That's too much money. But he said he needs to do the paperwork, he needs to do the agreements, he needs to send them a confirmation letter saying that he has received the money on their behalf. So I negotiated with him. We finally agreed on 4%. And I think 4% of 5,000 is actually $200. So I just told him 199, right? To give us $1. So we agreed on 199. So it's going to be $5,199 per unit. So that we shared that with the group already. So everyone is on knows about that. So they're aware. The second thing that you mentioned, I really love that idea, and it's something that the membership team is currently looking into. Some of the ideas that we have is to have membership fees, something really small that will make you a member of the organization, right? And if you're a member of the organization, you get opportunities to other investments that we have, other different projects that we're going to have in the future, and you get other opportunities to invest in other projects as well. Some can come at a really low cost. Like, for instance, we can, if we want to open like a farm in Africa, for instance, I'm just throwing these ideas out there. Regardless, we will all have to discuss and agree on the terms and the different projects. But this for just because of this, I just need this for an example. If we decide as a group that we want to open like maybe a hemp farm in Africa, maybe in Ghana or something, we can put together a proposal and say maybe it will cost $50 per month for everybody to get involved in this project and present it to the group, right? Present it to only the members. Mm-hmm. So only members will get opportunity to invest in any of our future projects. And with $50 a month contribution, they can invest in the hemp project in Ghana, or get the return on investment, and we split it accordingly. We can have other projects as well, like a bank and other things as well that will come up. But members will get a login credential with a unique username and password. They can log into our website, and they will get all the different projects that we will have in the future. So if you have any other projects that you feel that will be profitable for us as a group collectively, bring it forward for sure. We can vote on it, discuss it, and if we're good, we can all do it. Put money together. That's what it's all about.
I think I'll add to that too, and just say that even if people are very determined on being a part of the group who's purchasing the land, then that's something like where you have a smaller group of investors within the larger group of investors is also something that you can do. So maybe he'll bring 2,000, I'll bring 3,000, we'll put it together, that's our 5,000, and then he and I now share that unit. That is also another option as well. But
I'll suggest before, it will be smart to have an agreement between yourselves outside of the collective group, because so
that when the dividend comes in,
how to basically
where your money is going.
And even if your spouse, you're married, some people, I mean, they're happy now, but who knows what's gonna happen in the future, right? They might say, I want to leave my spouse. I don't like him anymore.
I want my land.
So how do you split it? So it's best to kind of have those agreements, individual agreements. For Nicole and I, we have a lifetime agreement. So it's, she can't leave no matter what. But just yeah.
All right, so I'm gonna leave shortly, but I think these questions are really good because at least this will force you to try to clarify the arrangement with your members as much as possible. So with this kind of arrangement, I think there are lots of creative ways to structure it. There's really no one size that fits all. And I think if you go to a lawyer that really knows what they're doing, if you tell them exactly what you hope to accomplish, because if I understand correctly, you want to buy land and you want to develop 75% of it that maybe you want to resell for a profit. And then the remaining 25% of the land you want to allocate to everyone.
Exactly.
So that individuals, if they want to build, whatever they want to do, they can do on the land.
Exactly.
And again, there are so many things to consider, right? Uh, it becomes very complex, right? If they want to build, then if you're doing a development, then everybody has to build something that meets a specific standard. Uh, Again, you find out if that's what people want to do. Um, but other than that, there are so many structures. There are so many ways you can set it up. You may have different structures for different types of arrangements. Um, there is possible to set this up using a cooperative. There is possible to just have a not-for-profit organization where everybody becomes a member. Um, there is the opportunity to use partnerships. There is also opportunity to use corporations. But again, once you're talking to a lawyer, start thinking about the tax implications as well. You want to have a structure that gives you flexibility, so you don't want to end up in a place where you're paying too much taxes down the road. So think of a structure that gives you flexibility for taxes, and look for ways that will put some flexibility in it as well, so that when people want to leave, they can also leave, right? And so if someone puts in 5,000 today and 2 years down the road, maybe you've bought the land, maybe you've not bought the land, and they say, "Oh, I want my money back." There should be a clause that will allow them get their 5,000 and walk away.
100%.
Maybe there is a fee they have to pay for it to get their money out. So all these things, it's possible to just have all of these things upfront and make it clear so that everyone knows exactly, okay, if I'm coming in with 5,000 today and I want to leave 3 months down the line, I may get only 4,005 back. I may get only 4,000 back. I may get, right, it depends. You can structure it that way just to make it. So once everything is set up, all the money will flow through your lawyer through their trust
Yeah.
account, and then that money can be held in trust by the lawyer on behalf of the organization.
Thank you so much. I think Mr. Solomon has a question for you. Mr. Solomon, you can unmute yourself.
Okay. Thank you, Akin. Ken, nice to see you again. Been quite a while. I'm not sure if you remember me.
Not
Um,
quite. I can see your face.
yeah, I know you will remember me because probably 8 years past now. I've been to your office a couple of times. Then I was in the field as a small business expert.
Oh, okay.
Working down. Yep. We did
Awesome.
some, try to do some things together. And of course, I still, receive your tax, efficient emails. Giving a good insight to my tax planning.
Oh,
I still,
wonderful,
I
wonderful.
still received
Thank
up
you.
to yesterday. So just to let you know,
Wonderful.
So I was pleasantly surprised when Aki said Ken is coming on, on board. So yeah, nice to see you. Thank you for all you've been
Welcome.
doing for the community.
Welcome.
Your expertise is quite, brilliant. Um,
Thank you.
now, my question is, in terms of your experience and interaction, I know during your presentation you talked about, you know, other people who could leverage, other community folks that we could leverage. In your experience, how are you able to tie, the purchase of land and also the development, and also make it, the transition smooth and manage the tax implication, both as a corporation, not for profit, and as individuals.
Well, I mean, it's gonna be challenging. I mean, you can do it effectively in a corporate structure, right? Because the only time you get a taxable event is when you start distributing the profits, right? And so that's when you begin to have taxable events in the corporation. So if you're able to set up a corporate structure, which may be challenging, because now if you have such a large group, then you may not be able to use a private corporation. I mean, you can still use a public corporation. You just have to do some more paperwork, but and it's going to be a little bit more costly. But again, there is going to be tax implications when you get to a point where you're distributing the gains, right? So if you build and then sell for a profit and you start distributing the profits, then yes, everybody gets taxed. But if you set it up as a not-for-profit organization, then all the benefits go to members. Then typically not-for-profits are not taxed. But again, you got to figure out a nice way to get those benefits to flow to members. Uh, but again, benefits flow to members, then that way there is really no tax implication if it's all done for the benefits of the members, whether it's a membership or maybe set up as a cooperative. But yeah, depending on how you want to have this structured, it's always good to get a lawyer that is that will understand exactly your vision, and then they will come up with a plan or with a structure that will make the most sense uh, for you. And then you may find out by the time you survey a group, you may find out that, well, some people they have no business, they don't want to own land, or they're not interested. Then maybe you can come up with a different structure for those people that want to own their land. They may have a totally different structure for that. But it's gonna be challenging to know what that will look like right now. When I mean, first you've not bought the land, you've not. So there's just so many things that is hard to see right now until. So you can't. It's tough to plan right now.
Okay, okay. Yeah, so thank you. Just a quick follow-up question
Yeah.
on what you also presented. So in terms of the, I know you spoke about the line of credit, right?
Yeah.
No, yeah. No, being in industry, I know that is very, well, with already completed structures and all that, it's pretty easy to get a line
That's
of
right.
credit for all those. But in terms of the land, their land, like we are proposing at this point, in your experience, although I have to, I could also, circle back to my colleague, in the industry, but from your own perspective as an accountant in a field, how easy has it been for folks you dealt with to really get a line of credit for their land? Because really that will really help us as a community here to, take care of certain things and to, get things going, because we could really, leverage on that and, do some startup project on the land, to secure the land and to also make the land, start generating revenue, which can be distributed, amongst us, to, in terms of the liquidity that our investment brings. So in your, in your field and in terms of, I'm trying to leverage your experience, interacting with other folks in the industry now, how easy and, I know we have different, type of lenders. I know the big lenders, the private lenders, et cetera, et cetera. Which category were they able to really, smoothly and easily, acquire that line of credit and and so on and so forth.
No, with land development is challenging. I mean, I can tell you that I've never done it myself, but at least based on conversations of people that I know that have done it, it's tough. It's challenging. It's challenging. If you have just land and go to a bank for money, no bank will give you money. Most likely, they won't give you money just because you own land. The only reason why a bank will give you money is because they see the potential for the land to generate some income. Right. So if you just own a piece of land, even though that land is free and clear, it's hard to get a bank to even put a line of credit on that empty land. And the reason is obvious, is because the land is not generating income. Again, if you can turn around and say, okay, well, this land I'm farming on it, or I'm renting it out to someone that is generating income, you have to show proof of income for a bank to finance that land, right? And so that's a big challenge. It's going to be challenging for you to put any line of credit on a land, even though you own it free and clear. So that's it. when it comes to developing the land, right? So it just comes to a numbers game, right? And the biggest challenge there for you is that you want to get financing to develop the land. And typically for banks to give you financing to develop a land, you got to show proof that you've sold, or if you want to develop units that you're planning to eventually sell, you need to walk into the bank with sale agreement that you've sold maybe 20%, sorry, 70%, 80% of that development, right? And that is the only way you will get building finance. And before you even get to that point, right, you need all these millions or lots of money you have to spend to get the land to that position to even develop, right? Servicing the land, getting all the permits from the city, getting the architectural design. All of these things require a lot of money, right? And so if you guys are collecting funds, it's better to, if you're raising 3 million, then maybe you want to buy land with half of that. Then you have the other half to service the land and to get the land up to a point where you're ready to develop and sell. Or maybe you have other people, partners that can help you raise the capital to do all of those servicing. So land development is challenging. So that's why I always encourage you guys, always, look for people that have done this before, so that way you understand the entire process, understand what is required, and just prepare yourself, right? Because you don't want to be surprised and get all these funds, and then you not get stuck, and you now have to start refunding everybody. I mean, while you've paid lawyers, you've paid this, and it just becomes messy. So always get a clear picture of what it will take, and obviously there will be surprises and things that will come up. But again, if you get a good understanding of what it takes, all the other small challenges that come up, you can deal with them, right? But it's always good to understand the whole picture. All right. Hopefully this is helpful. I got to run.
Okay.
But again, let me know
All right.
if you
Thank
want
you
to
so
get in
much.
touch with me.
Yeah.
Yeah, just Akin has my number. He can share that and my contact information.
Yeah.
Yeah, thanks, Ken. Yeah,
Okay.
thank
All
you.
right, guys.
We can thank
Okay,
you
bye.
now. Thank
Yeah,
you.
no worries. All right. Take care, guys.
Nicola asked a question. That is the 199 um just
That transaction.
just that transaction or getting legal documents. So legal documents, the bylaw, and all the agreements, we are basically trying to cover that. Um, you know, um, just to get the draft initially. But we can revise them multiple times and so on. But the 199 directly goes to the lawyer because he claims he needs that money because he's basically securing your investment and is basically monitoring it on your behalf. So when you send your $5,000 to him, he's gonna save that in an interest-bearing trust account. So he will give you like a monthly audit, like to tell you how much your money is doing, how much interest your money, that your money earned, and also give you like like an investment certificate, give you like a letter, and basically all the welcome package, right? He's gonna send that to you, and I believe that's what the 199 is for. Initially, he said he wanted 6%, which I felt it was too much. So he then said 4%, but I tried to talk him out of it. I had a couple of phone calls with him, and then we agreed on 199. So that's the lawyer's fee, or that goes to the lawyer.
9 eternal.
9 eternal.
Yeah, I have another question.
Sure.
It's based on the membership fees and stuff like that. Is it possible within the bylaws that with the events or whatever things that we have, where those profit from those events or whatever investment will substitute for our membership fees?
So like a way for you to basically not have to pay that membership.
The membership fee will be so low that, and what we're gonna be offering is gonna outweigh what you're really paying for, really. That's what we're gonna propose. Like the membership team is actually working on a package now, and they're going to be presenting that to the group. But the idea of membership is going to be something that everyone can afford pretty much. Just to get people to commit to the organization and to be part of the organization, right? So if you contribute to that monthly membership fee, it's just gonna give you that sense of ownership, that you're part of the a group of progressive Black people, Black investors, right? A Black investors group. But I love what you said in terms of how to kind of get it waived. Eventually we will do that, because as one of the original founding members of this organization, I don't expect you to be paying anything more than what you're going to be paying now for membership. In the future, if we have other projects, like future projects, we can then introduce, like if everyone agrees, if you guys vote and you agree on it, we can introduce other fees, or we can increase it for newer members, right?
Another thing that we mentioned in the future too, and I'm just saying this because I'm a part of the membership team, was doing something like a referral thing. Like, so if you refer somebody, then maybe some of your membership fee will be deferred or whatever, something like that. Those are just things that we're also kind of flying around. But for now, the membership fee will be mandatory for those who would like to be members.
Yeah.
Just until we get things started.
Oh, wait, and one other thing. If you're not a member, you can also invest. But if you're not a member, your investments will cost more, right? If you're not a member and you're not committing to the monthly membership fees, you can invest in any of our projects, but it will probably cost you more. Like, I think from the Black Print, for this project that we're doing, the land, is gonna cost non-members, I think, $6,199, right? Versus $5,199. Because if you're a member, though the membership fees again will be extremely low, because the point is not to extort money from people, but to just get that commitment, to feel like they're part of the family. Because people tend to support ideas that they put their money towards, right? Like, so if you
it's how I explain it is it's you're investing in this community, in what we're trying to do, which is to build, I think, the second Ontario Black owned, Black funded community ever in history. So that's a part of it being an investment group, is you investing in this community. That, yeah, as I said, is will be the second Black community, Black funded, Black owned.
So the membership team is working on the package, and then they'll be presenting. I'm hoping probably in 2 weeks' time, they'll have the package together. Some of the things you probably get is, like, you get perks, like discounts, and you get, like, opportunity, education, yeah, training, workshops, and stuff like that. So they're putting a package together, and the fee would, like, be low. So,
but we will take your idea of trying to see how we can maybe waive membership later on into account,
especially for the original founding members. I honestly think, let's assume your membership fee, I don't want to throw a figure out there, but let's assume your membership fee is $9.99, right? A month, $9.99. If you pay that for 1 year, then after maybe 2 years, maybe we've acquired the land, we've moved on to other projects, maybe we're opening a bank, for instance. The newer guys that come in and want to join the organization, I don't expect them to pay the same thing that you, as the original founding member, paid, right? So it's up to you guys to decide, to say, do we want to charge new members $9.99, or do we want to charge them, $11.99, something like that? It will be up to you guys to decide, right? So
this is my follow-up questions.
Yeah.
You answer. I'm not saying don't have a membership fee, because you're starting out, so it's necessary that we go through this now and put our money where our mouth is. I understand that part. So once we get to that point, will the founding members be grandfathered in as far as the membership fee is concerned? Meaning that if it changed for new members, it stays the same for the old members.
Yeah, that would be the idea.
Exactly, that would be the idea.
Okay.
So
That's
if
something else that
so
we
the
should note
because
as
the
well.
founding members are like the well, how will I put it? The foundation, like the
backbone.
The back, exactly, the backbone. They were there from the beginning, right? So it's up to you guys to decide however way you want to do it. So if you say for future members, maybe after 1 year, the members that come after 1 year, we charge them $12.99. The members that come after 2 years, we charge them $29.99. The members that come after 3 years, it's up to you guys to decide, you know?
Good idea. Thank you.
But good idea though.
Yeah, thank you. My question was answered. It's overstood.
Okay,
Great,
awesome.
thank you.
Any other questions for us? Can you read
Said,
that out?
have we determined how many founding members will be allowed?
I think the finance team said the target. So they have about 3 targets, I believe. So one of them for sure is for us to get to $2 million as a group. So once we get to that amount, I think the target amount, I think the project will be closed. So if 100 people were able to raise 2 million, that means we'll have 100 members as the founding members, right? So because the first project we're doing is to acquire the land. So if we get to the target amount, we will close out the membership for this first project. And when we have another project, we can open it up.
You close up the investment.
We'll close up the investment, but you know, what is the timeline to draft articles of the corporation? So, well, how will I put this one? So right now I'm trying to find a good lawyer that is reasonable and is cheap.
But Mr. Bonnie is looking into a lawyer from a law student from UFC who will
help us with the draft.
Hopefully help us with the draft.
Yeah, because so far all the quotes I've been getting from people, I mean, it's just an agreement. Like, you know, they say in 2008 plus taxes and, you know, almost $3,000 for like just to draft the agreement. Just one agreement. And remember, we have to do like 5 or 6. We need like the bylaw. We need the investors agreement. We need the members agreement. We need, I mean, so if we do $3,000 for just one agreement, by the time we multiply that by 6, you know, it adds up, right? So
it's gonna be real expensive.
So we're looking into the different options right now, but we'll keep you guys posted.
But we did project around, I think it's the end of December.
And
I think I want to say that, but don't quote me because I don't have the paperwork that.
And I think we should close for the holidays as well. So maybe after next week, after our next meeting, we'll probably announce, maybe we'll have another one, maybe 2 more meetings, and maybe we can have a party. You know?
Yeah, that's something else.
We can have a party, yeah.
Guys.
So yeah. So
a virtual party.
Maybe we'll have a party and then we'll close out for the holidays, and next year we'll, you know, we'll start.
I hope that answered your question.
Yeah.
So I'm does anybody else remember what? I think it was the end of December.
It's the end of December, Nicole.
Hey, I remembered.
Yeah, it's the end of December.
My brain's pretty good.
So end of December we'll have a party.
No, not for the party.
No, a draft.
For the draft.
For the draft. Okay. End of December.
What is the timeline for the draft? Yes, it did. Thank you. Okay.
Okay, nice. Awesome. So, any other questions for us? We are doing this. And we're doing it together. This time around, no stopping us, man. We're doing this. I want you guys to get excited, man. you know.
To get excited at the virtual party.
I know, yeah.
100%. 100%. All right. So thank you all, man. Thank you all so much. And yeah.
Have a good week.
Have a good night. Have a good
night. Yeah. Blessings.